traders, welcome to the TMT stock market strategy video for Tuesday, September 27th. Well, we did get some follow through, some good selling yesterday. Real nice movement to the downside. A lot of fear in the markets yesterday for the first time in a very long time. And really to kind of kick that off was Deutsche Bank with some capital worries that they're not going to have enough capital to pay that Department of Justice fine of 14 billion. I believe their market cap now is 12 billion, so they're in big trouble. They're trying to merge with Commerzbank in Germany, which Commerzbank just laid off 9,000 jobs, so they're also in trouble as well as the Italian banks. So Europe is not looking good at all. And then we had Bank of Japan comments on Sunday night going into Monday, which the market participants did not like as well. So where do we go from here? Well, we had the debate last night, and futures rallied from down 5 to up 11 with Hillary Clinton thinking that they liked obviously she won the debate. Nonetheless, I do believe that everyone is basically putting up the cards saying that Hillary Clinton will be the next president, and I do believe that that's already factored into the marketplace. So I think if Hillary gets in office, the market's going to sell off at one point. I mean, you might get the knee-jerk reaction, the markets go higher, and then I think the markets sell off anyway. You'll have a gridlock in Congress. Nothing gets done for another 4 years, possibly 8 if she gets reelected. And if you have Trump win, Trump wins, and if he does win, that's also going to spook the markets as well. So I think either way, the markets sell off at one point between, sometime before the election and after the election. So really, the focus is going to be on these banks. Wells Fargo again with that. With all their accounts, those phony accounts. So there's a lot going on. And obviously, it's in the Fed's best interest and the government's best interest to keep this market afloat. And you could see the manipulation during the day. If you're really staring at these charts and price action, you can really see that they're really, really trying to hold this market up here. Nonetheless, Janet Yellen more than likely is going to raise rates in December. So we'll see what happens. There's a lot chock full of nuts out there to digest. I do believe the bigger move is going to be to the downside. Even if we get any type of spikes up higher into the 2180, 90 area in the S&P, I do believe any spikes should be sold into at this time. And obviously, if there's something that does change dramatically, of course, we'll post that in the videos as well. Let's get right to it, guys. The TMT trading model is still on a sell signal. Just wanted to get that out to you guys. S&P stocks above the 50-day moving average, as you can see, is starting to deteriorate here. So we're losing a lot of stocks that are above the 50%. Now is at 41%. So out of the S&P 500, only 41% of stocks are above the 50-day moving average and losing its luster as well. Next is going to be the advanced decline with volume. As you guys know, follow me, you know I like this. Also part of my trading model. It is now below zero and staying below zero. This is not a good sign that the internals, the breadth of the market is deteriorating. Okay, so just keep an eye on things, guys, because I do believe when risk off happens, it's going to happen extremely fast. We had a nice big push in the VIX yesterday. And again, VIX at these extreme lows, you have to pay attention because everyone is one-sided and overly bullish in the market. And remember, we are up at these lofty levels, fully priced in the S&P. Fully priced, guys. There is no discount buying stocks in the S&P 500. You got to wonder what happens when they do unwind this trade. When the trade starts to unwind, and if you have, I'm saying, if something really nasty happens out there, like a Deutsche Bank bailout, you have to really be careful because I think everyone is going to be running for the doors. And despite its election year, and we all know that what happens, the Fed accommodates everyone and continues to keep the market propped up here. But at one point in time, they're not going to be able to do so. So you just really need to be careful out there. Look, me personally, I'm a trend trader. Whatever the trend is, we're going to continue to do until it doesn't work. But you have to realize, and you want to be foolish at a lot of these big levels here where there's really plenty of room to the downside. You just have to be cautious when in your trade, especially if you guys are holding overnight positions. All right, let's get right to the TLT. TLT had a nice recovery off of this bounce. We had the gap fill that I was looking for, and we had rates move lower. Now, reason why bonds moved higher, And finally, it's refreshing to see the correlation start to break a little bit. And again, it's only been a couple of days, but usually when bonds go higher, what happens to equity markets? They usually sell off. That's not has not been the case for the last 6, 7 months. Bonds, gold, and equities have been rallying. So somebody's going to be wrong here, right? So we want to see what happens. So the TLT rallied on a safe haven play the last several days, especially yesterday. And we want to see if the TLT will start to roll over again. There is not a sell signal here yet, but you could still see we're making lower lows and lower highs, okay? So we'll see where we go from here. This is something that we need to monitor but not trade. GLD, again, lower lows and lower highs, descending triangle, caught the top end of this descending triangle. And as you can see here, with the momentum oscillators as the RSI and MACD are really not doing too well. They're not really moving at all. If anything, they're moving to the downside. So we need to pay attention to GLD as well, because that's going to be a bigger trade. I do believe once we get a big flush in the GLD and the GDX, I do believe that the markets would be ready to base, stabilize, and then start to move higher again. That's what I'm looking for. I am definitely a better buyer than a seller in GLD and GDX. And let's get right into the indexes. As you can see here, we had this little pennant formation. We broke out of it off of the rate decision, and then we just kind of fell right back into play. And you could see what happens here, guys. And when you see this happen, that any rally now is not really sustainable, it's because that the market participants are really believing that there's really nothing left here that the Fed is going to do. Well, I mean, they're going to start cutting rates and be negative interest rates. So there's not much left here in their guns, if you will. So just, again, a word of caution. If you really want to be overly bullish, start looking to buy stocks at these levels, I would not do so. That's just me personally. Um, 60-minute, you can see here at 212.50 will be a big key level. 38% retracement comes in at 211.50. All right, and then we're at here at 214. If we lose the low from yesterday, we'll probably flush back down to that 212.50. We are up a little bit. We gave back a lot of the Hillary Clinton debate gains, if you will, from up down 5 to up 11 and a half. Now we're up 4 and a half. So gave a lot of it back in the European session. IWM, you can see here, big gap down. We failed miserably at the highs, and now we're starting to work back through this TMT proprietary price channel. All right, so 38% retracement in the bigger picture for me at 119. I believe that's where the market's probably headed. Spiders 210, as you guys all know, I've been talking about that for the last couple of months. That'll be the first target of any type of move to the downside. Transports looking um, okay. I mean, they're pulling back into support here, right to the penny, which is fine. If we start to lose that again and we lose the 50, we'll probably get back down to the 200. But I'm really not impressed at all with the transports. And as I mentioned to you, you've seen the last couple of days, I took it off, but you could see there's a inverted head and shoulders here, left shoulder, head, right shoulder, starting to really um, show shape here. But as this right side starts to expand, this will, I would probably negate this pattern here if we don't break out anytime soon. And last is going to be the Qs. You could see here, Qs doing well, much better than all the other indices. But keep an eye on what Apple does. I do believe Apple runs down to about 110 will be your first target, and then 107, 108 will be your second target to the downside, and then you would reevaluate it. Apple popped yesterday, really on no news. But again, it's the buy the dip, hold, keep buying Apple. It's a cold stock. So, but at one point in time, guys, it's an overvalued, tired growth stock that I believe that any spikes should be faded. That's just me personally, and we'll get a couple of charts out there. I know a couple of people asked me for a chart in Apple. Didn't get a chance to do it last night watching the debate, but I will do so tomorrow. All right, have a great day, everybody. Talk to you soon.